So today we are going to be diving into one of the most popular ETFs that are out there. In fact, it is one of the oldest ETFs that is on the market today. And it's also one of the most popular ETFs. Which one am I talking to? We're going to be talking about SPY today. So what is the SPY ETF? See, the SPY is an ETF that actually tracks the S&P 500. And if you don't know what the S&P 500 is, it is 500 of the largest stocks in the US today. And so SPY is an ETF that compiles all those large stocks into one fund. So all you have to do is buy SPY and you can own a little over 500 companies in just one trade. Now, the reason why SPY is advantageous is because if you invest in SPY, it is just trying to mirror the S&P 500, meaning that it is not trying to buy and sell a bunch of different securities, trying to beat the market. Instead, it is just mirroring that index. So its entire job is to stay as close as possible to what the S&P 500 is doing. Now, since the S&P 500 is considered a weighted index, what that means is the companies that are really good inside of the S&P 500 are going to have a larger weight allocation, which you'll see here in a second when I talk about the top 10 holdings. And so it's going to be big, major companies that you know and you love. Companies like Apple, Microsoft, Amazon, those types of companies. They're going to have a larger weight allocation in the portfolio, meaning that you're going to be owning those stocks when you buy SPY in a large allocation. Now, why would you even be interested in SPY if you want to invest in this ETF? So most investors who are looking to invest in US equities would be interested in SPY because these are the 500 largest companies in the US and truly represent a majority of the US economy when you look at how this is actually structured. So people who want exposure to US markets are going to look at something like SPY so that they are able to actually get into some of these large US companies. Now, there are a ton of pros to investing in ETFs, and we'll also talk about a couple of the cons as well. So some of the pros to SPY is that SPY has low expenses. So index funds and ETFs are known to have very low expenses. What this means is that it's more money in your portfolio to continue to compound over time. Number two is diversification. By investing in SPY, you are investing in over 500 companies within one trade. These are well-diversified companies who also do business internationally. So you are really well diversified when it comes to investing in SPY. The third one is convenience. ETFs are probably the most convenient way to invest out there because they trade exactly like a stock. So they don't trade like an index fund, which trades like a mutual fund. Instead, ETFs trade like a stock, so you can liquidate ETFs very quickly if you needed to. But in addition, they are extremely convenient. You don't have to buy and sell each and every single one of these specific companies. Instead, you can just buy it all in one trade, and it's all automated for you if you want it to be. And then lastly is tax efficiency. So ETFs are very tax efficient. And what I mean by that is that they do not buy and sell a ton of securities, meaning their turnover ratio is lower. This is something that a metric that you can look up for each ETF that you want to invest in is looking for what is called that turnover ratio. And if that turnover ratio is lower, that means your tax liability is also lower. Whereas mutual funds, things that buy and sell securities frequently, are going to have a higher turnover ratio, and that turnover ratio is going to become an issue for you over time. Now, there are maybe potentially two cons to the SPY ETF that you might want to be interested in, depending on what type of investor you are. Number one is there are potentially limited returns, meaning you're not going to beat the S&P 500, but listen to when I say that. 90% of investors out there who are professional investors do not beat the S&P 500 year in and year out. And of the 10% that do every single year, they are not the same year in and year out. So if the professional investors can't beat the market, why do you think that you can? So for me, if I can't beat them, why not join them? And then lastly, maybe for some people, you're not fully diversified, meaning you don't own international companies that specifically operate outside on international waters. And maybe you don't own any emerging markets or small caps. If that is part of your portfolio plan, then maybe you're not fully diversified. That would be the second con for some specific investors. Now, how and why would you buy SPY and where would you buy it? So you can buy SPY in a number of different accounts, from your Roth IRA to a traditional traditional IRA to a taxable brokerage account. And some of my favorite brokerages out there are Fidelity, Vanguard, Charles Schwab, M1 Finance. So those are 4 great brokerages that you can look into if you're interested in investing in SPY. If you're looking for a fully diversified ETF portfolio specifically, M1 Finance does something where they have specific pie charts where you can put together a pie portfolio and fully automate your investments. Now let's look at some of the metrics for SPY as we dive into there. So first we're going to look at some SPY summary data. And we pulled some of this data from ETF.com, a great resource if you want to go check out some ETF data as well. So the issuer for SPY is State Street Global Advisors. This is a very large company that does all different types of investments. The expense ratio is 0.09%. So for an S&P 500 ETF, that is still a very low expense ratio, but it is higher than some of the other ETFs out there, famously Vanguard's VOO. And we have another video comparing VOO to SPY. So if you want to check out that video, make sure you look up in the card above and or linked up down below. Now, assets under management for SPY is $418 billion. So this is a massive, massive fund, one of the largest ETFs out there today. The inception date for SPY means that it has a very, very long track record. It started in January of 1993, and the index tracked is the S&P 500. Now, the benchmark that it is trying to follow is MSCI USA Large Cap Index. So you'll see a lot of these other funds also trying to follow the MSCI USA Large Cap Index. And then lastly, the legal structure is unit investment tool. Now let's look at the performance of SPY over the last 10 years, for example. So short term, under a year, we don't really care about. What we care about is really the longer term numbers, but we'll look at year to date at the time I'm filming this video is 18.07%. Over the course of the last 1 year, it is 16.65%. Over the last 5 years, 11.44%. And over the last 10 years, 12.31%. Now the top 10 holdings are going to be Apple at 7.07%, Microsoft Corporation 6.42%, Amazon at 3.34%, Nvidia at 2.88%, Alphabet at 2.08%, Meta, which is Facebook, 1.81%, Alphabet Class C shares, which is Google's Class C shares, 1.80%, Tesla, 1.72%, Berkshire Hathaway, which is Warren Buffett's company, 1.70%, and then United Healthcare Group Incorporated, 1.27%. Now, as you'll see in that video where I talk about the difference between SPY and VOO, you'll see a differential in the top 10 holdings, which is very interesting. Then we have top 10 sectors. So technology services, 19.38%, electronic technology, 17.15%, finance, 12%, health technology, 10%, retail, 7%, and then we go on down the list for some of the minor technologies there. So obviously this is still a technology heavy stock. Most of these funds are, because tech is running the market right now when it comes to looking at a lot of these funds for specific investors. So these are the top 10 sectors. Like I said, if you're going to buy SPY, a great place to do it are the 4 brokerages I talked about: Vanguard, Fidelity, Charles Schwab, M1 Finance. Those are 4 great, fantastic places, especially if you want to build out a well-rounded portfolio for your retirement, then you'll be able to do that. So SPY, in my personal opinion, this is just my opinion, this is not financial advice, but SPY is a fantastic fund in my personal opinion. It would be something that I'd be happy to invest in, but I would also make sure that I did some of my due diligence when it came to some of these other funds, what their expense ratios are. That's the big metric that I'm looking at, because a lot of them are tracking the same exact index. So I want to keep those costs low. And if you're worried about liquidity or anything like that, you can also look at liquidity and maybe some of those other pieces, but also the turnover ratio. Turnover ratio is going to be a big one for me, because if the turnover ratio is really high, then you want to make sure that you keep those costs low, because you do not want a big tax bill come tax time. So this is the complete guide to SPY, which is SPDR's S&P 500 ETF. If you guys have any questions, make sure to leave them down in the comments below, and don't forget to like, subscribe, hit that notification bell as well. And guess what? We'll see you on the next video. And oh yeah, subscribe. Come on, just do it.